Welcome back, and joining me for a look at the day's markets action is Muhammed Wagley from Sasfin Wealth. Thank you so much for your time, Muhammed. There seems to be a loss of steam today, a little bit. We are seeing that on the JSE and also slightly on the Rand. But I mean, I guess still happy that the Rand is still below 18 Rand against the US dollar. This is something that we haven't seen in a while. What are the markets trading on right now?
It's quite interesting. Zanati, first of all, always a pleasure to be on your show. But to answer your question, I would say, at a bit of a loss, truth be told. I know yesterday we had quite a bit of momentum, following on from the great news coming out of China, who are obviously our biggest trading partner. And I think, some optimism in relation to that, really benefited the Rand. It looks like, we came off somewhat high bases. I know the all share gained, I think it was 0.8% yesterday. And I think today was really a case of giving up some of those gains while we maybe look ahead to some probably more relevant market moving data out from the US tomorrow. You did mention and the day after, you did mention the CPI earlier. So perhaps that's what the market's keeping an eye out for.
What are you actually expecting out of the CPI? And this is also an important print, looking at the fact that it is a week ahead of the Fed's monetary policy meeting next week.
Yeah, no, very much so. I would say a very important one. Look, truth be told, it's been quite strong, quite stable, leading into this month, the past couple of months as well. So the hope is that, we can see that continue, and perhaps we'll have seen a little bit of a bottom. I think that is broadly speaking, the expectation. So anything sort of any deviation from that would lead to the expectation of a, let's say, more aggressive response, at the meeting the following week. But ultimately, at the end of the day, I think we'll still get that sort of somewhat muted, maybe 25% basis point cut. I'd be very surprised if that had to change. We'd have to get terrible inflation numbers tomorrow. So let's see. Let's hope that that's not the case.
All right. Well, economic data that did come out locally is the mining and manufacturing production for October. I mean, these things are so late, Muhammad. We are in December already. They're taking us back to October. But we did see an uptick there, a slight uptick in manufacturing, I think 0.8% year on year, and on mining, 1.4%. I mean, those numbers, it is growth, encouraging. But at the same time, I mean, does this really point to the fact that there is no real growth?
Yeah, so look, it's difficult to look at the numbers sort of in a vacuum, and ultimately, the quantum is very small. We're talking single digit numbers and very low at that point as well. But I think what's worth remembering is sort of the basis that we've been coming off. Mining is in a bit of a slump, and we've been struggling to gain really any momentum for the past year and probably even beyond. So the hope is that perhaps we could have reached some type of a bottom. When I looked at sort of Tungela's numbers a little bit earlier, they made a big point of mentioning improved rail performance and things like that, and those little things are going to help us slowly, sort of but surely. For the time being, we're not seeing the numbers translate massively just yet, but what I will say is, at least from a mining perspective, this is the third month in sort of year-on-year growth that we've seen positivity. And in fact, you just on your point of how late we are, we even saw an upward revision of 4.9% for the September numbers. So it does paint a picture of us still building a little bit of momentum, but one has to consider that we're coming off very, very low bases, and we're desperate to see some positivity here, and that could also be playing a part, in the optimism that we're seeing. But it does, to me, paint a picture of a bit of a jump in momentum, and we're hoping that this can continue well into 2024. And I think, when you look at that in conjunction with the positivity that we're getting out of China, the hope is that will be the case. So let's see.
Well, talking about momentum, you mentioned Tungela. Of course, they released that pre-closure statement for the year, saying that they will exceed production, full-year production. Also talking about cost efficiencies that have filtered through on that front. I mean, this is one that investors have been waiting to pick up that positive momentum that I guess the company was riding on in, I think, 2020, 2022, 2021, 2022. Yeah. So what do you think about these numbers that they're churning out? Is the positive momentum coming back?
Well, that's definitely the picture that's being painted. And I think just sort of on that, it does really sort of look flattering from a management or sort of exec strategic perspective, because, you know, a lot of the things that they had looked into seem to be paying off currently. I think really the one thing, and I mentioned it earlier, was the improved rail performance, you know, and that's going to
Yes.
benefit them and others as well. But in addition to that, seems like they've taken steps towards streamlining their operations. Seems they're seeing a lot of sort of synergies in that respect. And it seems like we're seeing great performance from South Africa and over in Australia as well. And, you know, from a shareholder perspective, yes, it's not been perhaps the best couple of years, but, you know, they're continuing to stick to the, let's call it, commitment to dividends, you know, and they're putting sort of quite a bit of investment back into extending the life of their South African mine. So there's a lot to be positive and optimistic about in relation to these numbers. I wouldn't say that they're sort of just words. It does paint a picture of a company heading in the right direction. But, you know, at the end of the day, there's going to be quite a bit they need to keep an eye out for, just in terms of how things may affect the coal price. You know, there's lots of geopolitical tensions to factor, and, you know, just general market volatility. So broadly speaking, good numbers. You know, they were probably one of the big performers on the day. They gained just under 4%. But again, you know, you look at it, and you mentioned this point earlier, you look at it from a year-to-date perspective, you look at it in 2023, perhaps not as handsome as their returns in 2022, but, you know, at the end of the day, a step in the right direction.
All right. Well, Muhammad, let's get to your stock pick for today. What are you choosing?
So today I've gone for a cybersecurity company. In fact, I've gone with the biggest pure play cybersecurity company in the world, and that's Palo Alto Networks. Now, needless to say, even before things like AI and that sort of thing had come about, we'd been seeing a massive rise in cybersecurity attacks. And just sort of as an aside, you know, we see where Platinum came out today and mentioned a cybersecurity attack. So very topical, and I would just say that, you know, the risk for these sort of attacks have just become a little bit more prevalent, and that's like whether you're a big company, whether you're a mom and pop store, you know, and the need for cybersecurity in general is completely pervasive. So in that respect, Palo Alto is the market leader here. They've actually just come off 4% or 4 and a bit percent yesterday, and they've got a stock split due next week, which will make them a little bit more accessible too. So I think in the short term, as well as the long-term play, this is a really great company. You've got to have some exposure in the space, and this is probably my pick. So that's the one I'm going for.
All right. So thank you so much for your time and for your insights on what has been moving investors' money today, Muhammad. That was Muhammed Wagley from Sasfin Wealth.